America slammed its fist down and then immediately extended a hand for a handshake. What is this, strategy or desperation? A bluff or the beginning of something bigger? First, Washington imposed record-high tariffs of 245% on Chinese goods, and then, as if nothing had happened, made an official offer to come to the negotiating table. A paradox that at first glance appears to be political schizophrenia may, in fact, represent a profound shift in the architecture of the global economy. On April 14, 2025, the Trump administration raised tariffs on $150 billion worth of Chinese imports. Electric vehicle batteries, telecommunications equipment, and solar panels came under fire. Simultaneously, the U.S. Trade Representative publicly announced readiness for dialogue with Beijing. But who would believe in sincerity when behind the smile, there's a brass knuckle? According to Bloomberg, investors reacted not with optimism, but with panic. The indexes crashed. China stayed silent. It did not deny, it did not negotiate. It simply ignored the move. That silence was a slap in the face. For the first time, China is saying, we don't need you anymore. In California, a state that accounts for 11% of the U.S., GDP and $166 billion in trade with China, an internal economic panic began. Lieutenant Governor Eleni Kounalakis accused the White House of destroying supply chains. 47 business organizations, from Silicon Valley to the ports of Long Beach, signed a collective petition against the tariffs. According to Morgan Stanley, if the tariffs remain in place until the third quarter, the state will lose more than 142,000 jobs. And that's just the beginning. Red states like Texas, which actively export oilfield equipment and agricultural products, are also starting to sound the alarm. The Trump administration may end up isolating not China, but America itself. While the White House puffs its chest, the U.S. Federal Reserve has found itself in a trap. Inflation has reached 6.2% year over year, while GDP growth has slowed to 1.1%. According to data from JP Morgan, India, Brazil, and Saudi Arabia have dumped $43.7 billion in U.S. bonds over the past 6 weeks. The dollar is weakening. Markets are nervous. And on the horizon, there is no G20, no coordination like in 2008. If Powell raises rates, he crashes growth. If he lowers them, he crashes the currency. If he tries to do both, the system collapses. And China, it seems, has simply stepped aside and is watching as America battles itself. The next day, on April 15th, China's Ministry of Foreign Affairs released a statement. There will be no negotiations under pressure, no briefings, no explanations, no comments. According to Professor Shen Yi of Tsinghua University, this is not weakness, it is strategy. China has stopped participating in America's script. This is not a boycott. This is a reset. China is not merely staying silent. It has begun launching its own counterstrikes. On April 16th, Beijing imposed retaliatory tariffs of 125% on American aircraft, semiconductors, and construction machinery. The first to suffer was Boeing. The company's stock plummeted by 11.8% after Chinese airlines canceled orders for 70 aircraft. The total loss amounted to $10.6 billion. On the same day, Airbus signed a new strategic contract with China. This is no longer a response. It is a replacement. China is not seeking revenge. It is rewriting the rules. The next move was a currency maneuver. On April 17th, the yuan weakened to 7.98 per dollar. Not a collapse, but a calculation. The Chinese central banking system set the daily reference rate 84 basis points below expectations. Within 48 hours, export orders from Europe and Southeast Asia jumped by 3.2%. While America raises tariffs, China is making its goods cheaper. Beijing is wielding the weapon of currency flexibility, simultaneously neutralizing American sanctions. This is not devaluation, it is checkmate. Tariffs become meaningless if the yuan makes Chinese goods 12% cheaper. In the first quarter of 2025, China's exports to the United States fell by 27.4%. Meanwhile, exports to ASEAN countries grew by 19.8%, and to the European Union by 13.2%. Beijing and Brussels signed a 25-year trade agreement that includes provisions on RMB contracts and a dispute resolution mechanism outside the WTO framework. Trade no longer flows through New York and Los Angeles. Now, the routes go through Budapest and Jakarta. According to SAFE, China's trade surplus for the first quarter amounted to $273.4 billion. These funds are not sitting in reserves. They are being put to use. $62 billion went to the Semiconductor Development Fund, and $42.8 billion were allocated to subsidies for electric vehicle purchases in rural areas. China has opened 14 new RMB clearing banks in Africa and Eurasia. It is not printing money, it is deploying profits. According to IMF data, 61 countries now conduct more than 15% of their foreign trade outside of the dollar. The yuan's share in international SWIFT transfers has reached a record high, 5.4%. For the first time since 2013, the dollar's share has fallen below 39%. The world is no longer unified, it is fragmented into currency zones. Brazil pays for oil from Angola and Russia in yuan. India is promoting rupee-based settlements. South Korea and Germany still rely on the dollar, but they have begun accumulating RMB bonds. This is no longer a hypothesis. This is a new architecture. All of this is not about revenge. It's about reconstruction. China is building a world in which it no longer needs to negotiate with the United States. A world where isolation is not weakness but armor, where strength lies in independence. If today China has simply rewritten the rules, rejected negotiations, crashed Boeing's stock, devalued the yuan, and signed contracts with Europe, then imagine what will happen if it begins an offensive. Are you ready for the new reality? Share your thoughts in the comments.